Today, we are going to look at 5 stocks that have rocked the growth charts in 2023. One of them even has insane dividends. We're going to need a bigger portfolio. Dividends are always exciting as they trickle that happiness into our portfolios each month or quarter. However, a great growth stock can take our money to some very high places, pretty much in a relatively short period of time, if of course we're lucky enough to invest in the right ones. Honestly, most of the stocks on today's list were not even on my radar. And even with some of the amazing growth they've experienced in 2023, there is no guarantee that they are going to remain on the same trajectory. And there's also no guarantee that they will falter in the second half. We will just have to wait and see what happens. Whichever the case, it is absolutely going to be an interesting second half of the year for these stocks, without a doubt. Join the conversation. Let us know in the comments your best growth performer in 2023 thus far. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a big thank you for that click. When it comes to today's list, the only qualifiers that I really used was that they needed some serious growth in 2023, and they needed to have a share price over $5, so we won't be looking at those penny stocks. Keeping that all in mind, and without any further ado, let's do this. Kicking off this list, we have the ATS Corporation with a ticker of ATS. They are based out of Cambridge, Ontario, and they design and build factory systems. Apparently, they are also good at growing their share price. They have a market cap of $5.43 billion, and their beta is a little bit more volatile than the market at 1.63. Their earnings per share come in at 0.32, and they've got a pretty hefty PE ratio of 42.40. That kind of makes me think they may be overvalued, but let's continue here. Their return on equity comes in at 12.09%, and they've got a debt to equity ratio a little higher than I like to see, but 112.29%. When it comes to dividends, this is the only one on today's list that does not have a dividend. So let's just jump straight into those ROIs. So their 3-year return on investment is 203.22%. Not too shabby. When we look at their 1-year return on investment, we get 60.74%, and we're ranking these by their 2023. So 2023, they have so far made 38.31%. That is not a bad return. That is well above the market for sure. Coming in at number 4, we have OTEX Corp with a ticker of OTEX. They are based out of Waterloo, Ontario, and they develop and sell enterprise information management software. There must be a high demand for this software with the growth they have been seeing. Let's jump into their market cap. It comes in at $15.37 billion. Their beta, slightly less volatile than the market, comes in at a 0.90. Earnings per share, 0.21. Their price to earnings ratio is also a little high at 35.40. So once again, maybe they're overvalued, but keep in mind, all of these companies have experienced massive growth. So in some cases, that price to earnings ratio may be a result of that, especially in the first 2 cases. Their return on equity, that comes in at 10.23%, and they've got an even higher debt to equity ratio at 228.98%. I do not like seeing those high numbers, but sometimes you have to borrow some money to make money, and I think that may be part of the case going on here. Let's look at their dividends. They have a yield of 2.334%. That is paid out quarterly in the amount of 24.3 cents USD per share. Their payout ratio, a little high, 85.257%. Still sustainable though, and that's what matters. When we look at their returns, their 3-year return on investment comes in at 19.87%. Add in your dividends and we get 25.29%. For their 1-year return on investment, we have 11.77%. Adding in the dividends, we get a total return of 13.64%. And of course, for their 2023 return on investment, that comes in at 39.79%. Total return after the dividends of 40.39%. And once again, that's a really nice number for your 2023 returns. Taking our 3rd spot, we have Hammond Manufacturing Company with a ticker of HMM.A. They are based out of Guelph, Ontario, and they provide electrical and electronic components to, well, original equipment manufacturers, or the OEM folk. This is paid off big for them in the form of, well, a bigger stock. Their market cap comes in at $50.14 million. They have a fairly average beta of 1.07. Their earnings per share comes in at 1.24, and they have a nice looking price to earnings ratio of 5.50. Their return on equity comes in at 12.65%. And when we look at their debt to equity ratio, that comes in at 67.01%. That's looking a lot better. In terms of dividends, they have a yield of 1.024%. It is a semi-annual dividend of 3 cents per share. Their payout ratio is a measly 4.84%, so super sustainable, no worries there. Let's look at their returns. For their 3-year return on investment, we get 244.71%. Factor in the dividends, we got 253.53%. When we look at their 1-year return on investment, that comes in at 46.50%. Total return with the dividends added in is 48.00%. Looking at their 2023 return on investment, they have 42.23%, add in the dividend, and they have a total return of 42.96%. That is perfectly okay. And once again, these numbers are looking fantastic. In our almost top spot at number 2, we have Wall Financial Corporation with a ticker of WFC. They are based out of Vancouver, and they develop and manage various rental properties, including hotels such as the Sheraton Vancouver Wall Centre Hotel. Like Monopoly, I guess the share goes up with a hotel. Their market cap, it comes in at $648.78 million. A pretty good looking beta at 0.72. Their earnings per share comes in at 1.49, and they have a price to earnings ratio of 13.70. That return on equity, it comes in at 22.11%. Their debt to equity ratio, 187.46%. That kind of makes sense when you're dealing with real estate, so I'm going to give them a pass on that one. This is the one that has that crazy dividend yield I sort of hinted at in the beginning. Their yield is 15%. It's paid out quarterly in the amount of $3 per share. Now, their payout ratio, I've never seen one this high, 202%. That is absolutely unsustainable. Now we have to take a few things into consideration. This is a brand new dividend, and with that payout ratio so high, I really expect to see this fall in the future as they sort of sort things out. I'm not sure why they started so high, but enjoy it in the short term. I have a feeling that one's going to come down. When we look at their return on investment, I did not think I would see a negative in here, but we do. For their 3-year return on investment is negative 14.86%. So they did falter early in the pandemic, and that makes sense because how many people were using hotels in the pandemic? Not a lot. So definitely a big chunk of their revenue was affected. When we move into their 1-year return on investment as things opened up, we get 58.73%, which is great. Now for 2023, their return on investment this year has been 48.15%. They did pay out a dividend, so your total return for 2023 is 70.37%. That's pretty good. In our top spot at number 1, we have, once again, another Hammond group. This time it's Hammond Power Solutions with a ticker of HPS.A. They are also based out of Guelph, Ontario, and they design and manufacture custom electrical magnetics, cast resin, custom liquid-filled distribution, and power transformers. Let's just see how big is big with this one. So their market cap comes in at $508.83 million, and once again, another very stable beta of 0.72. Their earnings per share comes in at 1.32, and they have a price to earnings ratio of 14.50. Their return on equity comes in at 20.75%, and their debt to equity ratio is a measly 12.26%. I am really liking these numbers. They do have a dividend, a smaller yield of 1.171%. That's paid out quarterly in the amount of 12.5 cents per share. Their payout ratio is very sustainable at 9.73%. Let's look at their returns. Their 3-year return on investment comes in at a huge 541.29%. Adding in the dividends, we get a total return of 557.88%. Holy banana bread, that's not too bad. In their 1-year return on investment, we get 167.44%. Adding in the dividends, 170.10% for their total return. Let's look at 2023. So in 2023, their return on investment is a huge 109.47%. That's a total return of 110.08%. Wow, that is absolutely not too shabby. These stocks have absolutely grown beyond respectability. I did have HPS.A in a past chart, and I am absolutely kicking myself now for not stocking up on some of their stock. There is no guarantee that any of these will continue to grow, but they have piqued my interest for sure. As always, if you like some of these stocks I showcased today, be sure to do your due diligence on them and don't just buy a stock without doing your homework. That's not the way investing should work. If you want to see if I am going to buy into one of these stocks, be sure to follow me on Blossom so you can see every trade I make. There is a handy dandy link below to download the app and get started. What are you waiting for? Keep the learning going. Watch my video on Power Corporation of Canada, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.